It's Monday, the 1st of March 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, profits and dividends. Australian companies are back in the black and paying out to shareholders. Plus, the world's greatest investor, Warren Buffett, gives his view on financial markets. The Federal Treasurer hints at a shake-up for superannuation. And AMP sells part of its business to a US fund manager. Our lead story today, higher profits and bigger dividends were the key themes out of the just wrapped up interim profit season, with the miners being the star performers. Around 56% of companies reported higher profits for the 6 months to the end of December. That's much better than the 36% the previous reporting season. Around half of the companies that reported beat expectations, according to AMP Capital's Dr. Shane Oliver, and almost 50% increased dividends. 6 months ago, 55% cut dividends. The big miners were the standout players. All three, BHP, Fortescue and Rio Tinto, announced record payouts. The Commonwealth Bank was the only major bank to report, and it upped its dividend. Macquarie Group was a good performer, so too Goodman Group, but CSL and Telstra were mixed. Some of the best earnings upgrades during the season came from retailers and media companies. There was also a sense during the reporting season that the best companies, and Woolworths and Wesfarmers were good examples, worked hard to evolve through the crisis. In their cases, they supercharged their push into digital retailing. The big question now is whether companies and boards are willing to invest money to grow, or are they still shell-shocked by the pandemic? Certainly the tech groups, Afterpay, Zipco, Appen and Xero, talk about growth and investing in the future, but the oil and gas groups and oil refineries are struggling to find a way forward given prices. The engineering and pipeline groups are all looking for exposure to greener opportunities, and the energy transition from fossil fuels to renewables was a constant theme throughout the season. It was a much better than anticipated earnings season. The economy is in better shape than 3 months ago. If the vaccine rollout proceeds successfully, not just here but overseas as well, then 2021 should be a solid year for earnings. On to overseas news. Warren Buffett has sent out his annual letter to shareholders. It's the most watched piece of advice on Wall Street because the so-called Oracle of Omaha's Berkshire Hathaway has outperformed most other investment funds over many, many decades. 90-year-old Mr. Buffett said debt investors faced a bleak future and it was time to stay away from the fixed income market. Berkshire itself has about $113 billion in short-term bonds. Johnson & Johnson's coronavirus vaccine has been cleared for use in the United States, the third shot that's gained approval. The advantages of the J&J shot are that it's a single shot and it doesn't have to be stored at extremely low temperatures, making a rollout far easier. President Joe Biden's $1.9 trillion stimulus package passed the House of Reps over the weekend and now heads to the Senate. That should help rally equity markets. And a study out of Stanford University has confirmed that we're suffering from Zoom fatigue. The study says Zoom meetings cause greater stress than meeting in real life. The reason is the non-verbal overload of endless video calls. On to local news. Friday was a rough day on the local share market, with the S&P ASX 200 finishing down 2.4%. That was the worst trading day since September. The market lost almost 2% last week, and for the month of February was up 1%. The Aussie dollar tumbled over the weekend, falling from 3-year peaks. Higher long-term bond yields triggered a sell-off in risk-sensitive currencies like the Australian unit. The dollar is currently trading a touch over 77 US cents. Treasurer Josh Frydenberg said retirees must do a better job drawing down their superannuation, and super funds should offer new retirement income products so people spend more of their money in retirement. He said there needed to be more flexibility in the system. The government has legislated to increase the superannuation guarantee, currently at 9.5%, to 12% by the middle of 2025. Meanwhile, there were reports over the weekend that the government was considering allowing workers to dip into superannuation for some expenses, such as housing. It would be a trade-off deal that would allow the legislated superannuation increase to go ahead, but provide carve-outs for some workers. US-based fund manager Ares Management will buy 60% of AMP Capital for $1.35 billion, creating a 60-40 joint venture which will target infrastructure, equity and debt and property. All asset classes are areas where AMP Capital is a market leader, and Ares brings global distribution to the deal. It comes after the US manager walked away from the opportunity to buy the complete business last month. The question is whether the price offered is enough. Best measure of that comes from the market, and on a day in which shares tumbled, AMP ended up almost 6%. It was the strongest weekend this year for auctions, with almost 2,500 properties going under the hammer. The preliminary clearance rate was 82%, though the final rate will be under that level. In Sydney, the clearance rate was 89%, and it was 78% in Melbourne. Anecdotally, prices were strong. The Financial Review is reporting this morning that Qantas Chief Executive Alan Joyce has secured support from at least 3 state premiers for the National Cabinet to agree to a framework to keep domestic borders open once the vaccination rollout has reached 4 million. That's the Fear and Greed business headlines for today. Make sure you've hit subscribe so you don't miss out. There's also more in today's full Fear and Greed podcast, including an interview with Tim Dring from EY about the outlook for the banks. I'm Sean Aylmer. Enjoy your day.